Hi,
Well, let's get straight into it, because last year this time we were talking about a year gone by that was tougher than had been anticipated. This year, things growing, but still a lot of caution about the road ahead and about the economic circumstances which have blunted growth prospects. So take us through, first of all, your perspective on this operating environment.
The operating environment has improved for us a little, but I think there can be little doubt that consumers generally in South Africa are still feeling a fair amount of pressure. And I think sentiment's also been affected a little in this country, even at street level, by ongoing uncertainty and concerns about what's happening in Europe and with the dollar and the Greek crisis. And so there is an air of cautious optimism rather than one of real positivity.
So where a business like yours has most often been attributed with defensive characteristics, with the focus specifically on education, is that a characteristic that still holds, or are you seeing some deterioration in that status?
Well, I think there's pretty clear evidence in these numbers that education remains an absolute top priority. As a matter of fact, the tougher the going gets, the more important a good education becomes. And there's fairly clear evidence just in the numbers, and we're very proud to say that an important part of our numbers are the academic achievements of our students as well. When we talk about results, we mean academic results and numbers results, and both would suggest that we've actually got a very good story to tell on the education front in South Africa at this time.
Of course, academic results incentive for more clients to actually flock your way. But if you're looking at the numbers, it's contributing 90% to group revenue at this stage, showing nice recovery, revenue growth coming in 11% higher. We've also seen a growth in expenditure. Where have you been spending in this category?
Primarily, we've invested in new infrastructure to create extra places, both on existing campuses that we've been able to expand, as well as new campuses for existing brands. And then one very exciting area of investment that I'd like to tell you a little bit about is that we've spent a lot of money in the technology space. We've really boosted our efforts in that space to, first of all, grow our capability in providing a better student experience and better administration, better academic operations. But that also contains the seeds of our first venture into new technology-supported teaching and learning, which gives us access to new students or the same students in different ways and to new markets, all of which is interesting for the future.
So you've got these education projects in the pipeline. What about your acquisitive spree? Because that kind of took a back seat for a while as you worked on improving capacity utilization, for a period.
Yes, that's absolutely true, but this year saw a resumption of accelerated investment into new infrastructure.
Okay, this in the context of what kind of cost environment? Because in this business, it's a challenge, to keep those rising costs down. And we've seen operating profit up 13%. And if you're looking at education specifically, operating profit up on that end, 17%.
Managing the costs is a crucial issue, and the big driver of costs in education is, of course, the educators' salaries. Reference to Stats SA will show you the EPI, Education Price Index, which has consistently been 2 or 3% ahead of CPI, and perhaps a lot less volatile than CPI as well, which suggests that there has been a general level throughout the country of increased expenditure, mainly on teachers' salaries, but also the other peripheral costs. Of course, we have to buy power and telcos and things like that.
And how easy is it then to pass those on to the consumer? Where does your pricing power sit?
So far, we've been able to be successful in getting consumers to agree that if you don't have excellent teachers who are well paid and therefore happy to be in the job, you're just not going to get a good education. And people understand and accept that, perhaps a little reluctantly at times, but thus far we've always been able to persuade people that this is actually a great investment for their children's future.
Before we let you go, let's focus on this resourcing division, because we've seen revenue falling back there slightly, operating profit down 19%. So that an element of the business that's now under pressure, and one would assume it's a sign of the times we're in, where you were talking about earlier, this operating environment that is overall a tough one, and job losses a key characteristic of this time.
What's affected us more particularly, our resourcing or staffing business is much more concerned with finding permanent positions for high demand scarce skills in IT, finance and engineering. And in that space, it's not so much been job losses that that have affected us. As a longer time cycle, people are more cautious about investing in new staff, and therefore the time cycle to make the decision to invest has been extended. And of course, the overhead clock keeps running while people make up their minds. And that's had an unfortunate impact on the cost structure and thus the profitability. But we are very pleased with that business. It remains a very good performer, profitable, good return on capital, good cash flow, not too much management time. So we like the business, we like it as part of the group.
When do you see that scenario changing, though, so that you could leverage off the kind of, you can leverage more off this side and this arm of the business?
Well, it's pretty tightly linked, obviously, to the employment cycle. And once we get back into a more vigorous phase of growth, and growth in those core areas, IT, finance, engineering, indications, for example, of greater infrastructure spend in the latest budget, those things will be positive for us, but employment tends to be a lagging indicator, and we will need to see more momentum before that really picks up.
Yeah, well, let's leave it there. Frank, thanks so much for joining us this afternoon.